10 reasons why silver is going to $100. Silver has been the most suppressed, misunderstood, and strategically overlooked metal in modern financial history. For over 60 years, central banks, bullion banks, and policymakers have capped its price, painted the tape, and weaponized the futures markets to keep it just another industrial commodity. But that facade is cracking. The forces gathering today, monetary, industrial, geopolitical, and technological, are converging into the perfect storm. The result will not be $30 silver or $50 silver. We are heading for $100 silver and beyond. As Martin Armstrong has been saying for years, once silver breaks $50 and then $75, it's game over. The suppression schemes collapse, and the parabolic revaluation begins. We're now on that road. In fact, silver already gave us a taste of what's coming. On the last trading day of August 2025, the COMEX closed under $40, but in the access market on Sunday night, silver blew past $40, $50. Despite every effort to paint the tape, reality bled through. That's a crack in the dam, and when it bursts, we'll see numbers the mainstream never imagined. Here are 10 reasons why $100 silver isn't hype, it's destiny. By 1, the end of 60 years of suppression. For decades, silver has been capped through concentrated short positions on the COMEX derivatives games and coordinated interventions. The Hunt brothers of 1980 showed what happens when real physical demand collides with a paper suppression regime. Silver went from under $6 to nearly $50 in months. Since then, the banks have learned to hide the game better. But suppression only works until it doesn't. JP Morgan, HSBC, and the bullion banks have been fined billions for spoofing, manipulation, and fake trades. The credibility of the system is shot. More importantly, physical demand is now overwhelming paper supply. The sheer weight of industrial, investor, and sovereign demand is breaking the levee. Once it bursts, price discovery won't crawl, it will gap upward violently. 2. The silver-gold ratio is broken. For most of recorded history, the silver-to-gold ratio floated between 12:1 and 20:1. Even when governments abandoned formal bimetallism, the long-term natural ratio, based on geology and mining output, has stayed near 15.1. Today, the ratio is 80.1, utterly disconnected from reality. That means either gold is dramatically overpriced, unlikely given global debt levels, or silver is catastrophically underpriced. If gold trades at $20,500, a normalized ratio of 25.1 alone implies $100 silver. If gold surges toward Armstrong's long-term projections, $5,000 to $10,000. Silver's $100 mark is just the opening bid. 3. Silver is a critical mineral. The U.S. government is about to add silver to its official critical minerals list, a classification that changes everything. This designation acknowledges what insiders have known for years. Silver isn't just poor man's gold. It is a strategic, irreplaceable resource for defense, energy, and technology. Consider this. Every Tomahawk cruise missile consumes 500 ounces of silver vaporized in the act of launch. Every drone, radar system, and satellite uses silver in its circuitry. Once the Pentagon and defense contractors are forced to secure reserves, silver will trade as a matter of national security, not industrial convenience. That alone pushes it into triple digits. 4. Exploding solar and green tech demand. Silver is the most conductive metal on Earth. That makes it the lifeblood of solar panels, electric vehicles, and the broader green energy transition. Each new EV requires up to 50 grams of silver. Each solar panel uses 15 to 20 grams, with governments worldwide throwing trillions at green infrastructure. Demand is compounding faster than miners can supply. Here's the kicker. Once silver is in a solar panel, it's gone. Unlike gold, which is endlessly recycled, industrial silver is consumed and lost to the landfill. This permanent drain is driving the market towards scarcity shock. 5. Supply is collapsing. Silver is mostly mined as a byproduct of copper, lead, and zinc production. That means supply isn't dictated by silver demand, but by the economics of base metals. With global slowdowns, copper and zinc production is stagnating, cutting off silver output at the knees. Meanwhile, the primary silver mines are struggling. Ore grades are falling, costs are soaring, and new discoveries are rare. Recycling can't close the gap. Put simply, silver production has peaked. Demand hasn't. That imbalance guarantees higher prices. 6. The sovereign stackers are here. For the first time in decades, sovereign governments are quietly stockpiling silver. China, India, and Russia are all believed to be accumulating both above-ground stocks and fresh mine supply. The West has no known strategic silver reserves, perhaps deliberately hidden, perhaps non-existent. This means the East will control the future flow of silver. When sovereigns compete with industrial users and private investors for the same dwindling pool of supply, prices won't just rise, they'll spike. 7. Monetary hedge. In a debt supernova, global debt has exploded past $350 trillion. Fiat currencies are devaluing daily. Gold has already made its move, setting records across dozens of currencies. Silver is always the laggard until it isn't. Historically, silver is the high beta cousin of gold. It sleeps through the early stages of a crisis, then wakes up violently. When investors realize silver is the only monetary metal they can still buy cheaply, demand will ignite. Even a 5 to 10% shift of global savings into silver would overwhelm available supply tenfold. $100 silver becomes the floor, not the ceiling. 8. The COMEX time bomb. The COMEX futures market is a fractional reserve casino. At any given time, there are 200-300 ounces of paper, silver claims for every real ounce in registered inventory. That's worse leverage than Lehman Brothers before 2008. All it takes is one black swan delivery event, one hedge fund, sovereign or industrial buyer demanding actual bars, and the system collapses. Paper shorts will be forced to cover at any price. That's how you get a moonshot, $30 to $100, not in years, but in days. 9. Retail mania is just beginning. The 2021 silver squeeze showed how fragile the market really is. A handful of Reddit traders buying Eagles and Maple Leafs forced premiums to skyrocket, inventories to vanish, and COMEX warehouses to wobble. That was just the dress rehearsal. Next time, retail won't be chasing for fun. It will be chasing for survival, fleeing inflation, currency debasement, and financial repression. With 330 million Americans and billions more worldwide, it only takes a tiny fraction of retail investors trying to buy silver simultaneously to drain the system dry. 10. The psychology of scarcity markets. Move on psychology as much as fundamentals. Silver has always been the most underappreciated asset, mocked as poor man's gold, left to languish in the shadows. But when the narrative flips, it flips violently. The moment silver breaks decisively over 50, the old Hunt Brothers high and the 2011 peak, psychology will flip from apathy to mania. Headlines will scream, silver breaks record. Retail, institutions, and even governments will scramble to get exposure. Momentum will feed on itself until $100 isn't just possible, it's inevitable. Conclusion. Silver's path to $100 isn't wishful thinking. It's the logical outcome of broken ratios, critical mineral status, exploding industrial demand, collapsing supply, sovereign accumulation, monetary panic, and the fragility of paper markets. The August 2025 breakout, silver ripping through 40.50 in the access market after the COMEX tried to close it lower, was the canary in the coal mine. The system can't keep a lid on this forever. Once silver takes out $50 and then $75, the Armstrong thresholds, the market psychology will flip overnight. At that point, the poor man's gold becomes the world's most coveted asset. As Armstrong has been saying for years, the cycles don't lie. And if you want to understand the roadmap, why silver's move to $100 is just the beginning, you need to read The World, according to Martin Armstrong, Conversations with the Master Forecaster. Get your copy here and see why Armstrong has been ahead of the curve on silver, gold, crypto, and global capital flows for decades. The suppression is ending, the fundamentals are screaming, and once the psychology flips, there will be no turning back. $100 silver isn't a fantasy, it's destiny.